700 trillion of financial assets, 1.3 trillion of Bitcoin. I mean, it's kind of like, I don't want to sound crazy or, hyperbolic, but I mean, I think we might all be really, really surprised by how much this thing can go up and does go up. I saw Samson Mao in Atlanta. I mean, he's just like willing to bet his kids on the fact that we're going to $1 million. Jesus, if we go to $1 million, that's going to be life altering and frankly, a shock to the existing legacy finance guys. The world doesn't understand just how solid the hands are that hold the I mean, it's not like it goes to 75 and, oh yeah, there's going to be a ton of supply. No, everyone who's in this is like, we're playing for $1 million. I mean, I think when we get to $1 million a coin, you're going to see, we could touch upon this whole multiplier thing. Have you noticed how, you know what I'm talking about? Like roughly $8 billion has gone into the ETFs, and the market cap of Bitcoin as a result of, since that started, the market cap of Bitcoin has gone up by 300. That's a 37 multiplier.
Founder and managing partner of Equity Management Associates, Larry Lepard believes that Bitcoin could experience a massive increase in value, surprising many people. With $700 trillion in global financial assets and only $1.3 trillion in Bitcoin, he believes Bitcoin's value could rise significantly. He even suggests that Bitcoin might reach $1 million per coin, which would not only be life-changing, but also shock traditional finance experts. Lepard notes that the people holding Bitcoin are committed and patient, not quick to sell even if the price hits $75,000. Stay until the end of the video to hear Larry Lepard as he reveals why he is certain that a massive price surge is soon to come. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Larry Lepard on Bitcoin's massive surge.
The cash and stocks piece of it, 350 is real estate, okay? So Bitcoin's total market cap today is 1.3 trillion. Of course, not all that's for sale, but that is. So the 1.3 over 350, I mean, what is that, like 1/3%, of the total money out there? And so some of that 350 is going to realize that they're being debased and the only way to protect themselves, or the best way to protect themselves, is Bitcoin. And they're going to start coming in and try and buy some pro rata share of Bitcoin. And what they're going to find is it's hard to buy, and hard to buy without shoving up the price. But they are going to shove up the price. And I mean, even if you only took, say the bond market is 100, say the bond market's $100 trillion, okay, worldwide bond market. Let's say even if only 10% of the bond market comes and says, you know what, we need to hedge against this, we need to get some Bitcoin. Well, that's $10 trillion. That's 10x where we are, almost 10x where we are today. And by the way, all of that 1.3 is not for sale. I mean, so, that gets you from, 60,000, 60 some odd thousand to 600,000. If it were just a straight 1-for-1 multiplier, but it's not. It's better than that, because if you look at, and I found this fascinating. Fred Krueger on Twitter has done some great work on this. Everyone recommend you follow him. It's at Krueger. $8 billion has gone into Bitcoin since the ETFs got formed. These numbers are a few days old. Bitcoin has gone up in value by $300 billion. It went from roughly $1 trillion to $1.3 trillion. So that would imply that $8 trillion of new flows has shoved the overall value of the asset up by 300. So that's a 37x multiplier. Now, I'm not saying that the multiplier will always be there. And, what do you mean by multiplier? Well, what I mean is that as 8 billion tried to buy it, there just wasn't enough available supply, to convince people to sell it. It had to go up that amount. And so now think about this, there's 100 billion of bonds and 100 trillion of bonds, and 10 trillion might come after this. Even if only 1 trillion came after this, you would, and let's say the multiplier is not 37. That's exaggerated right now because, we're just starting and, the ETFs are a new thing. Let's say it goes down to 5 or 10. That would still, represent just enormous growth. I mean, if 1 trillion of bonds comes after this, that's 10 trillion. The thing needs to go up by. Again, you kind of get to 500,000 or 600,000 a coin. So, I mean, look at I see a world where we're going to go through 100, then we're going to go through 200, we're going to go through 400, we're going to go through 1 million, and eventually. We could go to 100 million, which is full hyper Bitcoinization. I'm not sure if we'll get there and when we'll get there. They might do a monetary reset before that, but I could easily see 2, 3, 4, million per coin, which is serious money. So the ETF thing has really and Saylor predicted this. He did a great job of saying, hey folks, this is one of the few chances in history to front run Wall Street, because they just don't understand it. And in my speech in Bitcoin Madeira, I said, a similar thing occurred to me. Of course, I blew it. In '86, Microsoft came public, in 1986, and it was trading at 14 times trailing earnings and growing 40% a year, which is pretty friggin' cheap for a company growing that fast. I bought it, with my bonus and my savings, and and I had the experience of meeting Steve Ballmer a few years earlier, and he had said to my roommate, he was roommates with my business school roommate. And he said, "Hey, Larry, this MS-DOS thing is going to be on every computer in every household all over the world. Hundreds and hundreds of millions, if not billions of people are going to use this. It's the base layer of these microcomputers, and they're going to be used to do all kinds of things." This was 40 years ago now. And I couldn't see it. I mean, I kind of got it. I knew he was semi-right, but I didn't fully understand it. And, little did I know just how absolutely right he was. And they're not willing to listen to it, and they think it's too good to be true. I mean, I get all this. I get all the FUD. And I also get, I think to me, it's tragic. I mean, it created a great opportunity for some really smart people to buy at 15,000, but I think it's tragic what Sam Bankman-Fried and all the shitcoins did to the space. I mean, I think they really set us back quite a bit because, I have a lot of smart friends who are like, I'm not getting involved with that. There's a bunch of frauds in that area, and
yes.
I get it. If you're just looking at it cursorily, I get it. Sam Bankman-Fried was a master fraud. We all knew it. We were telling him. We were writing letters to the SEC saying, "You're going to investigate this guy. This is bad shit." But and as we all know, Bitcoin's not a shit coin. It's completely different than all those other coins. But to somebody who's lazy or just hasn't taken the time to do the work, they could easily conclude that this is just another one of those. So. I get it. I've often said I think this, we get to hyper Bitcoinization in the 2035 area, but, it could come much sooner. It really could. I just don't want to predict that and be wrong. All along I've been thinking to myself, well, look, when 2008 happened, I thought the dollar was going to die. Right? And obviously I was very wrong. I don't want to overpromise and underdeliver. I'm pretty sure this whole thing plays out by the mid 2030s, probably a lot sooner. Because it is kind of the, suddenly then all at once. And, I think, do we talk about Silicon Valley Bank earlier? I like to use the Silicon Valley.
That was one of the things, we didn't
I like
get to.
Silicon Valley Bank as a comparable.
New York Bank too, our community.
This morning they just bailed that out. But in the Silicon Valley Bank case, they sold some bonds. They took a markdown. Some accountants did the math and said, holy shit, this thing's worthless. There's $20 million negative equity here, $20 billion in negative equity. 6 days later, the bank was gone. And one of those 6 days, $45 billion worth of money went out the door. It was a digital bank run. This was not George Bailey in the savings and loan. This was, one day, 45%. So what does that mean? It means that everyone who was a depositor there very quickly concluded, oh shit, this thing's no good. I got to get my money out of here, or I'm going to, obviously, anything you had on deposit there over and above $250,000 was at risk. Of course, it turns out it wasn't because they bailed it out. But so that kind of contagion, that kind of awareness, that quickness, that could apply to a reserve currency. Do you know what I mean? Now, we're a long ways away from that, I think. But, what happens, here's a scenario. What happens when the U.S. 10-year trades at 6, 7, 8, 9, 10, okay? Because people aren't trusting it and they're dumping it.
Right.
Okay? And the dollar is going down. And people, the Fed says, well, this is a real problem because, we're going to have to pay more interest on all our bonds and the deficits are going to blow out. And so the Fed says, okay, we're coming back in with QE and yield curve control, and the amount's going to be unlimited. And and then the first couple of months, it's a big number. It's trillions and trillions. And the Fed balance sheet, which is now in the sevens, I think it went as high as 9. It's come back down. The Fed balance sheet goes to 11, 12, 13, 14, 15, 18. And suddenly, what'll happen is, Brennan, what I think will happen is that awareness will be spreading of what's happening here. It's like, oh my God. They have lost control of this monetary system. They cannot, there is a quote unquote, soft run on the dollar. And people don't want to hold dollar-denominated bonds. People don't want to hold dollars. People are buying things that are an alternative to that. By the way, when all this is going on, Bitcoin's gone from 200 to 600 quickly.
Right.
And
Right.
gold's at 3,000 or 4,000. So you've got those signals. So,
Right.
Those of us who are in the know and people who are aware of monetary economics and how it all works are like, holy shit, this currency's failing. I've seen this movie before. I've seen it in Zimbabwe. I've seen it in Venezuela. I've seen it in Weimar, Germany. And then what happens is you get into the panicking first is the right thing to do. He who panics first panics best. By panic, I mean you sell the dollar and you buy something that can't be printed, right? And of course that just makes it worse. And, I'm very much like Silicon Valley. Everybody and their brother says, get me the hell out of this thing right now. And so Bitcoin goes to 1 million, and of course a lot of people are afraid to buy it. Like, how the hell can I pay $1 million for it? Well, guess what? It's going to go to infinity in dollar terms because the dollar is going to go to zero. Yep. I'm not predicting this. I'm not saying that's what will happen. I have no idea the time frame, and I'm not trying to be a doomster. I'm just describing the pattern that has happened when other currencies fail. Now, we've never had, other than Rome, which they debased the denarius over a couple hundred years to zero. But in general, reserve currencies don't fail. Right? I mean, this is the U.S. dollar we're talking about. It's the world's reserve currency. I say that in general, but there's a first for everything. And it's to my way of seeing it, it's not out of the realm of possibility. It definitely falls into it could happen, can, and if it does happen. You're going to be really glad that if you had savings. By the way, stocks will go up a lot too, because on the other side, the stocks will be pricing whatever the new currency is. The loser, the sucker at the table, as Luke Grumman likes to say, is the bond market, right? I mean, the bond market's just going to get wiped out, just totally wiped out. I mean, this is why what Saylor's doing. Saylor is doing the Hugo Stinnes trade, right? Which is to say, he's borrowing, he's borrowing and he's using, in dollars. So he owes people back dollars, and he's using those dollars to buy Bitcoin. And the Bitcoin will go up in price, and the dollars will go down in value. He'll pay him back in worthless dollars at some point in the future. And I mean, this is how, in my opinion, he'll end up being the richest man in the world, in 5 or 10 years.
Absolutely.
Larry Lepard discusses how Bitcoin's market cap, currently $1.3 trillion, is tiny compared to other major asset classes like cash, stocks, and real estate, which total around $350 trillion. He believes that as more investors recognize the risk of inflation and currency devaluation, they'll turn to Bitcoin as a safe haven. This influx of money could drive up Bitcoin's price significantly. For instance, if even a small percentage of the $100 trillion bond market shifts into Bitcoin, its price could potentially skyrocket to $600,000 per coin or more. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.